Hello everyone, my name is 𝒂𝒏💂💂💂. Are compliance regulations becoming so complex that they are killing the businesses? This compliance is no longer a side function. It's a core operational requirement. AML assessment is no longer just a regulatory requirement. It's a fundamental necessity to safeguard organizations from financial, legal, and reputational risks. Do sanctions work or not? The answer is both yes and no.
Hello everyone, and welcome you to this new episode, new webinar part brought to you by the Soltesz Institute. My name is Viktoria Soltesz. I'm the founder of the Institute, and as you know by now, we are fighting for an ethical and transparent payment and banking industry where everybody is well informed about the latest technologies, gossips, news, and innovations. And today we are going to talk about a subject which is very close to my heart, but I feel like people still understand payments and banking as a compliance topic. So it is important to talk about, but I just wanted to show that compliance is not always about moving money, and moving money is not always about compliance, but they are heavily connected to each other and they are heavily reliant on each other. And Anna accepted my invitation. Anna is an absolute perfect candidate to deliver this webinar because she knows a lot of things about anti-money laundering, payment systems, banking, moving money internationally, the sanctions, the risk, the threats. So I think that we will learn a lot from Anna today about payments, AML, and the banking risks. So welcome, Anna. Thank you so much for joining me and accepting my invitation. Tell us a bit more about yourself. How did you end up being a compliance AML specialist in payments, and what is your relationship to the industry?
So I started from the very early years of my careers. I was a frontline employee in a banking institution. So this is where I was also dealing with cards, with payments and everything. We were executing payments at that time. And I was there on the same role for many years. So I started exploring opportunities. I have been involved in the operations of an investment firm. Then I became a director in that investment firm and non-executive. I then became an executive director in an electronic money institution, mostly handling and dealing with compliance with PSD2, AML, sanctions. I also worked in the Forex industry as a head of compliance, dealing with MiFID, dealing with sanctions, dealing with AML. And later I became an anti-financial crime advisor and working with various entities. And I'm also very active, as you know, on LinkedIn for people who may not know me. I try to publish to increase awareness on anti-financial crime. So yes, I have experience in both payments and AML.
I think we share the same goal to educate people about the importance of knowing how our financial system works and how risky could be different money movements and how complicated is the compliance around payments and banking. Usually what we always do, we collected some questions from the audience before we started, but I also put some of my questions in the stack, but this will just give us a good skeleton of the conversation. Let's jump in straight away. How compliance decisions affect payment and banking, and what is even the relationship for, compliance and payment and banking?
Well, I'm trying to think of one aspect of payment and banking that is not related to compliance, right? I mean, every single operation in the payment industry, in the banking industry, is connected with compliance because, and when I say compliance, I mostly refer to anti-money laundering compliance. Like, for example, determining the risk an organization is willing to take in order to pursue their objective, their risk appetite. This is something that is established on a board level, and it's of course related with anti-money laundering compliance also. With who are we going to do business with? All this screening, all this risk assessment, the customer due diligence that we do. Why do we do it, right? Also, for transactions, AML compliance may affect whether transactions will be approved or will be delayed or will be rejected, and decisions also, different decisions, correspondent banking relationships also, right? Compliance is also there because which bank is going to offer correspondent services to another institution that is not compliant with its legal obligations? I don't know what your thoughts are on that, Victoria.
I'm just thinking that for an average person on the street, when we're talking about compliance, they might not even understand the reason why we're all doing that. Okay, so what? I'm spending 20 euros and give it to my friend. Ooh, what's the problem? Or why do we even need to eliminate cash? So what? I'm giving 10,000 under the table. What's the damage? In your understanding, what is the damage and what are we really afraid of? And why are we regulating everything to the core that it becomes really a burden for businesses and everyone involved to even open a bank account or send money? Like, why are we even doing it? What's the damage? What are we afraid of?
Look, the issue is financial crime. Well, as, for example, you giving money under the table. This is something illegal, right? So this is what actually anti-financial crime regulations are trying to achieve, to prevent companies from accepting the proceeds of a crime. Tax evasion, paying under the table, under the law, it's tax evasion. So tax evasion is a criminal offense. So the bank, the payment institution, the EMI, needs to ensure to the extent possible that it's not allowing these people that commit these crimes to use or abuse their products and services to launder that money. That's the whole idea.
Everybody who is thinking about money laundering, they're really thinking about, accepting money for drugs or human trafficking or something horrible. So they might not really even see the big picture that what could be the extent of a damage when we are actually accepting money under the table. Ooh, what's the big deal? I'm doing it once in a blue moon. In your understanding, how would you define money laundering in a way that it really can relate to everyday transactions, like everyday spending, everyday business relations, which is obviously not proceeds from drug trafficking or human trafficking and tax evasion, but just a genuine mistake? Could it even be money laundering?
Well, we have the criminal activity, any criminal activity. And yes, tax evasion for many people, it's nothing. It's not important. As long as you didn't pay what you had to pay, it's considered illegal money. So even tax evasion, drug trafficking, as you said, fraud is the new drug money, as studies show. All these criminal activities, what criminals are trying to do, but actors are trying to do, is to disguise the link between the crime and the source. So this is what they are trying. So the law enforcement are not in a position to link the funds with the crime, because if they cannot link the funds with the crime, they cannot prosecute someone for money laundering. They impose now some legal obligations on banks and other financial institutions to prevent bad actors from continuing their crimes. Some people say, but I'm not a drug trafficker, so I don't care. You're not a drug trafficker. But if my kid or your kid is involved in drugs, then you will care about drug trafficking and money laundering. Because as something does not affect us personally, everything is okay. But if it touches you on a personal level, this is when you care. And the people that say it's a burden, and it's because maybe they are not affected personally, but the effects on the society and tax evasion, of course, the government has less money, receives less money. Again, it's the law. We need to pay our taxes. If we avoid paying that, it's illegal. So, yeah, this is how I would explain money laundering.
Right. So you follow the money and you catch the criminal, then you follow the motivation, and then you really see that what's happening behind the scenes, right? So that's the way that we can actually fight efficiently against criminal activities and money laundering, to make sure that we are forcing financial institutions to play by the rules. Do I understand it correctly?
Yes. Overall, what the bad actors are trying to do is to disguise, to make money laundering very sophisticated today. They know the system, they know what works. They know if that bank in Cyprus or that bank in Germany or that bank in the UK has low AML standards, and they know how to bypass if you have weaknesses. So what I always say is that we are not trying. Some people say, whatever we do, money laundering is increasing every year. Yes. And nobody asks you or me to stop money laundering globally. What the law asks is to prevent criminals from abusing your services. This is what they ask you to do. And this is what we are required to do. And this is what we can do. So I don't know if this answers your question, but yeah.
So think globally, but act locally. And companies, I think, might not even be aware that how important is their decision, because a lot of companies think, okay, I'm not a bank, I'm not a financial institution, so I don't have to follow these rules, but they are wrong, right? And in what extent normal businesses need to follow these AML compliance rules, and how much responsibility they take for accepting payments or transfers that they shouldn't?
Well, of course, it depends on the national law, but in some countries like Cyprus, if a company is not regulated, we have the regulated sector, the sector which is obliged, and it's in the law that they are subject to AML laws. And this includes banks, payment institutions, electronic money institutions, lawyers, accountants, and some other professions. Also, now we will have new businesses that will be considered as regulated or obliged entities. So entities that are not subject to AML, to provision, under the recent regulatory framework in Europe, they can still be held liable in case they fail to prevent a member, a senior manager from their company, to commit any type of financial crime, either fraud or money laundering, and especially money laundering. So they do have some legal obligations. And the other thing that is very risky, in my opinion, if you have lost whatever type of company you are, if you have high risk of being abused for money laundering, even if you are not regulated, the banks will either classify you as high risk or may not be willing to open an account to your business. And which company in the world can operate without a bank account legitimately, right? So yes, all companies should care.
Yeah. And let's talk about a bit more, because this is what I see a lot in my profession. People think, okay, I'm legal, So why the bank doesn't want to work with me? Why do you think banks think differently than the legal team? When the legal team says, yes, you're fine, go for it, the bank still says, no, not in my accord. Why do you think it happens? And how comes that banks can say no even when something is legal? Why this happens?
I did a video recently on YouTube exactly why banks close bank accounts without notice. And so, yes, overall, banks banks are businesses. And like every other business, you cannot tell banks or your business, I cannot tell you with who to do business with, right? So if a customer, if they consider that the risk of a customer to be involved in financial crime or being abused in financial crime is too high at the level that they cannot afford, they cannot accept, they will reject the customer. But in some other cases, they may decide that, this customer is not worth our resources, is not worth our time, too much cost versus the benefit that we get. And as such, we decline the client. It doesn't mean that the customer has done something illegal. Not necessarily. But it's a bank decision, it's a business decision. In some cases, if not all cases, they are not allowed to do that under the law. So they keep this information to the minimum. Again, doesn't matter what we think, doesn't matter what I think, whether it's fair, whether it's unfair, these are the facts. So that's my response to that.
Okay. But as a business, don't you think that I have a right to a bank account? Like, if I do everything right, the government should secure that I do have a bank account, and they need to really force banks to take me regardless of the risk.
If they can do it, let them do it. I mean, if the government can tell a bank with who to do business with, why not? But in reality, you cannot tell any business with who to do business with. This is what happens in real life, whether it's fair or unfair. Yes, everyone has the right, but the bank also has the right to decide with who to do business with. Now, I've seen in some countries, I think it was a directive from a bank in Europe, they stated that if a bank chooses to reject a client, they need to do it under reasonable grounds and they need to have proof for their decisions. This is not applicable in all countries, but in some countries it is applicable. And also some banks are not allowed to refuse services to categories of customers. For example, I don't offer services to pets. They are not allowed to do that in some countries. I don't want to offer services to non-profit organizations. They are too risky. What they need to do under the law is to assess each customer separately. They need to be able to prove that the enhanced due diligence measures that they impose are not enough to make them accept the risk and be able to justify that to the regulator if they ask for more information. In other words, in those countries that this is applicable, the supervisor, until now, they were asking, why did you accept this client? Now they will also be asking why you did not accept this client.
Exactly. And of course, we can have a much better society when you are not demotivated to enter any kind of category of business. So we're not restricting certain areas of business that, okay, don't open a charity business because you're never going to get a bank account anyway. So, it's not really fair, right?
It's not. Yeah.
What do you think? What are the most common mistakes which create these AML risks? What are the usual suspects to look out for, what banks don't really like?
In my experience, one of the biggest mistakes is assuming that because we have the policies, because we have the procedures for many years and they are effective, then we are okay. Now, the problem with this attitude is that things are changing. Financial crime is changing. It's becoming much more sophisticated. If we believe that the system that we had 3, 4, 5 years ago will be effective today, we cannot beat bad actors that are using sophisticated, and they are upgrading their techniques with systems that were designed for financial crime from 5 years before. And also managing risk in practice. What do I mean by that? Regulators are moving from the approach of, does the institution have an AML program in place? They're moving from this to, is the AML program effective? And the questions for businesses, can I prove that the AML program that I have in place is indeed effective? And it's not only compliance, it's also, some companies believe that if they tick the boxes of the law, you need to have that. Yes, I do. I have that. I have that also. Yes, I'm also doing transaction monitoring. I'm also doing screening. I'm also doing enhanced due diligence for high risk customers. So this is not enough. What the regulators expect to see is that you really prevent bad actors from abusing your services, either for money laundering or any other type of financial crime. So regulators want they want to see substance in your AML program. This is one of the most common mistakes that I see in companies.
Do you know how many times I see AML policies written with ChatGPT? It's just something to have, right? What is your AML KYC policy? Copy paste everything. Maybe they don't even change the different criterias of like the date is not filled or the company name is wrong. They have it just to have it, right? And that's usually not good. How would you write a good AML KYC policy, which is easily readable and enforceable for every member of that business? Because if someone is a marketing professional or HR professional, they know that they have this, but they might not feel it as it's theirs. What would you recommend? Shall we use the template? Shall we bring something in-house? Shall we develop something individually? What's the best course of action here?
Definitely, your policies and procedures need to be tailored to your business. Now, if you take something from another company and you tailor it to your business, but I've done that, and trust me, it's better to write an AML manual from scratch rather than changing every 2-3 words. You need to change something because for your business, it's something different. That's the most important thing. In-house, outsource that. Well, in the European Union now, some functions will not be, and inside we know that the compliance function cannot be outsourced. What that person needs to ensure is that the policies, the procedures are first compliant with the current law, which is changing now with the EU AML package, and that they are tailored to your own risk appetite, to your own unique risks. That's the most important thing. So, and everything, usually everything starts from the top, from the board, from the senior management. If they have the right attitude towards compliance, towards AML, then and ensure that the employees also understand their legal obligations and they understand why we're doing what we are doing, then we are in a very good way.
You're right. I think the why is missing a lot of times, and a lot of times we're doing things just because we have to. There's a box to tick. Okay, I collect your passport just to have it on file, but we don't really understand the why behind it, and maybe these conversations can help people understand more why am I doing things and how my work is benefiting the big picture and the larger society, right?
Have you ever tried to train salespeople in financial institutions?
Yes, we do that a lot. Yes.
Not easy because, and the other thing is that it's easy to quantify sales. You know how much people are selling and how much revenue they generate for a company. In the case of the compliance department, you cannot quantify the job of the compliance. you don't know how much penalties you would have received if compliance wasn't there. You don't know how many correspondent banking relationships you would have lost if the compliance was not there. Still, compliance is often treated as a loophole where you throw money and you see no results. Because it's something you cannot quantify. You cannot calculate how much compliance has saved you over the years.
And I had a conversation with the business owner a long time ago, and he told me, Victoria, it makes no sense. I have to pay a person just to block business for me. And if you think about it, usually compliance is the one who is saying no rather than yes. But I think it's also the approach to compliance with the right person who really understands why things happen is actually helping your business, as you said, to protect your business, to avoid penalties, to make sure that the business is generating revenue on a long term. So I think the attitude towards compliance will change if people realize what are the repercussions if you really don't keep it, right?
Yeah. Look, compliance is actually blocking bad business. Right? And this is what they should be doing. Something that the management often sees as it's still business. Yes, but what you are required to do as a company is to prevent financial crime. So, yeah, the compliance department would definitely block some business, but the bad business. A business must operate, must accept legitimate money, right? Because if it's illegal, you have breached the law. This is the role of the AML officer. Now, if a company wants to work with dirty money, it cannot be compliant. So, yes, the job of the compliance officer is to block bad business, meaning helping the company grow in a legitimate way, not because they want to stop business, but they want to protect the company from receiving penalties. In some cases, they say, okay, the penalty is relatively small compared to what they did. It's not only the penalty.
Hello everyone, my name is Viktoria Soltesz and I'm the founder of the Soltesz Institute. Startups fail. And if they fail, most probably they are failing because they don't have the thought out and proper channels for payments and banking.
Hello everyone, my name is 𝒂𝒏𝒂𝒏𝒅𝒂𝒏. Compliance is no longer a side function. It's a core operational requirement.
Hey, welcome everybody. I'm 𝒂𝒂𝒏𝒂𝒏. Instant payments is transforming the way money moves all across the globe, across all the different industries.
In some cases, they say, okay, the penalty is relatively small compared to what they did. It's not only the penalty. After a penalty, there's also a remediation program, a monitorship program, which additional costs, additional employees, additional system. So it's not only a penalty, plus it's a reputation. And we have the example of the recent years with Credit Suisse, a systemic bank, which collapsed. What triggered the collapse was not AML, but because it had a lot of adverse media the previous years, plus some bad risk management decisions they did with their investments. And then the internal auditor announced that there were weaknesses in their internal controls that triggered a bank run. People started withdrawing funds because there was this history of bad adverse media, So they started withdrawing, not even with capital injection from the supervisor, they couldn't survive. So you understand that it's also the reputational damage that can be caused over the years. And that's really scary, because if you have a bad reputation, again, banks will not open an account to your business.
That's so true. And so many people don't even understand the adverse media effects. And there is this expression for compliance when they're checking the reviews, the customer complaints, the ratings. And companies don't even understand how important is reputation to be able to do business, legit or not, misleading or not, true or not. But yeah, unfortunately, reviews are almost as important as your financial statement today when you're getting a new bank or a payment provider. Sure. Let's talk about sanctions, because I have this question here and I'm super curious about your opinion. How sanction risk affect payments differently from banking?
So, in payments, sanctions risk can cause delays, rejected transactions, because payments often need to be screened and cleared in real time. Now, in banking, it's a bit different. Sanctions risks are derived from customer relationships, right? So you perform screening to decide whether a customer will be onboarded or whether you will be able to retain an account. So for payment providers, the focus is to prevent funds from moving into the payment system, because, again, and in banking also, the sanctions compliance involves, again, movement of funds, but also other decisions, whether you will accept on a customer level, because no sanctioned individual will come to your business and say, hey, here I am, I'm sanctioned and I want to open an account with you. So they're going to use third parties. They're going to use a large chain of transactions or chain of companies. Strawmen also people who are clean, but they're actually acting as front, businesses that act as front. So they know how to hide. And in banking, where we also have trade documentation, they are dealing with imports, exports, also payments of invoices. They have to do more. It's the due diligence that they do for sanctions is more deep. Whereas in a payment institution, the risks are mostly related to the transaction. Of course, it depends on the business plan, on the type of business and the types of products and services a payment institution is offering. Now, both sectors, they have significant sanctions exposure. And as I said, it's also the reputational risks. Banks are often exposed a bit more because they offer more products, more services, and they maintain more complex business relationships. Usually, because there are some payment institutions, EMIs, that have the same risk because they are large and they are important to the financial system.
I also get that question a lot, that if the money is coming from another bank account, why are they checking again? It should be obvious that one bank checked it. It should be good enough for the other bank. Why this thinking is wrong?
Now, you as a bank or me as a bank, I'm also an obliged entity. I'm also required to do that. If I choose to rely and consider, that the money are coming from a bank, they must have done their due diligence. And I will not do any due diligence on them. The law asks the bank to do due diligence. So if you rely on another bank's due diligence and the regulator comes and tell you, that money were the proceeds of a crime, show me what you did. And then you say, the money came from another bank, so they are clean. We assume it's clean. Do you think they're going to tell you, okay, I will not impose a penalty?
Exactly. So you can't push the responsibility on someone else.
You cannot blame someone else. The regulator will not accept that. They will tell why you didn't do your due diligence. So it's as simple as that. You are required to do that. I didn't see anywhere that, you are allowed to accept funds from another bank without due diligence, yes, it lowers the risk, but it will not protect you if something happens, right?
Yes. How comes that, if I'm good enough for one bank and I'm rejected by the other bank, even if they are in the same country, they should have the same risk appetite, right? So if I'm good enough for one, why am I rejected by the other? What are the usual problems in here?
They don't have the same risk appetite.
And how could this happen then?
Well, I've seen banks, I'll say there are financial institutions who have medium to high risk appetite. Like, for example, not all, some EMIs. There are some other institutions that have medium-low risk appetite. Not low, not medium, medium-low. So it's a big difference. So the EMI may be willing to accept a customer because it has a higher risk appetite, and the bank may not be willing to accept that. Just giving an example now. Same with two banks. The one bank operating, let's say, in a high-risk country, of course, it does have higher risk appetite. Now, two banks in Europe, again, the one may be medium-low, the other may be medium. And there may be banks that have medium-high. They do exist also. And there are banks I know banks in Europe that accept most of their business are high-risk customers. So they may have different risk appetites.
So why do banks close client accounts? Is it because they change their risk appetite, or do they close client account from Monday to Tuesday because the client did something wrong, or is a mixture of both? What's happening there?
Well, maybe the customer has done something illegal, or they believe that has done something illegal. But overall, the idea of client's account is the same with any other type of account. As we said before, maybe they believe that it's too costly to maintain this client account. It costs us significant money. It costs us significant resources. So we don't want that client. And they notify the client that, okay, come and take your money. Or they may believe that the account may be abused, maybe not, but I saw some red flags and I don't want that customer. Maybe the customer has done nothing illegal, just something suspicious for them, and they decide that, okay, we don't want that customer.
Every bank is also working with other banks, right? So there is no way that there's only one bank and they're not connected to anything. So everybody is like connected. So many times I see that you as a customer don't even know, but me as a financial institution or a bank stopped working with these guys and now I'm working with those guys, and those guys don't accept what these guys used to accept. So on a customer level, you would think that, what happened? I didn't do anything wrong. And from Monday to Tuesday, they closed my account. And it might not be the decision of the financial institution, but the underlying correspondent or intermediary bank said, not anymore. And that could be due to new sanctions, new regulation in a country which is not even mine, somewhere far away. But that's the risk here, that it can happen even without you as a business doing something wrong, but it affects your business significantly. So that's what I usually say. Do some planning. And that's why it's very important that you, first of all, understand how banking and payment and the underlying system work, but also to have contingency plans and understand how could it affect your business, and obviously get ready for the worst case scenarios. And I think this is actually also a question that we have here. How should businesses build payment and banking and compliance together from the beginning to avoid this happening, to make sure that all the departments are working together and compliance is indeed only blocking the bad business, but not the good one?
So if a business considers compliance while they're designing their products, while they're designing their system, while they're designing their onboarding processes, then you start building the necessary controls from the very beginning, from day one. Now, I've seen in my professional career many businesses that they urge to launch their products. They want to start acquiring customers, go live and they implement then minimum controls, and they believe that, okay, I'll deal with compliance later. We will fix everything after we start onboarding client. This is the worst thing, one of the worst things you can do to your business, because then you start implementing training, you will need changes in your system. And then the vendor may say, we cannot do that. We cannot, our system was not built for that. Yeah, but the regulation requires us this, and this. Yes, we can do A and B, but we cannot do C. Yeah, but it's a legal requirement. Yes, but we cannot do it because the system was not built for this, You either end up being non-compliant, or you rebuild your system from the very beginning. And tell me one business who wants to do that. Rebuild the systems that they invested for so long. So it's very important what we call compliance by design. Do everything from the beginning to ensure that it complies with the relevant regulation, because the cost later is much more.
That's so true. But compliance can also change, right? So if something changes, have you seen that companies are going back and fixing things because yesterday it was okay, but today is not? For example, there are new sanctions coming up. We used to accept money from that country, but today we cannot. Or for example, something is happening in the risk appetite, as you said, and okay, from now on, we don't really like these kind of businesses. What can a company then do? How is the best way to change their compliance and make sure that everybody is on board with those changes in the company?
Yeah, this is the reality. Things are changing fast. So it's very important, the AML program, to be flexible, to be built in a way that you are able to make changes. Consider for granted that there will be changes. Some people say the only stable thing in life is change, and things are changing fast. So yes, the compliance, not only AML, for any other regulation, needs to be created in a way that is flexible enough to keep up with changes in the market, and also with changes in the regulatory system.
We're always talking about compliance is getting more and more complex, and there is more compliance, and we haven't checked that yesterday, but we have to do that today. Have you seen deregulation? And if you have seen it, how did it affect companies or anything that deregulation affected? You think that we should do deregulation, or we just need to focus on getting more and more strict?
The regulations are changing, and especially in the European Union, it's changing significantly. The minimum requirements of what companies are required to do are increased now. So we do need to consider these changes in the regulations. It's now going to be harmonized, same rules for everyone. A combination, the rules are more now. I personally see this new regulation, a combination of the rules-based approach, as a friend called it, a combination of the rules-based approach and risk-based approach. So it's both. Now, we don't have any option. If there is some change in a big regulation, we need to consider this and update our policies, update our procedures.
Yes. Because everybody is, talking about the regulation and it's getting strict, but sometimes we see some deregulation that, we were not allowed to do that last year, but this year it's okay. Like, for example, sanctions are changing, or, the rating of certain countries are changing, and then we didn't do business with whatever country, but now we can. So that can also open opportunities. And if someone understands compliance, that person can actually open up a whole new revenue channel or a whole new opportunity for business, right?
Yeah. That's why I said the program must be flexible enough for regulation upgrades and deregulation also. If there is a change in the regulation and there are upgrades in the regulation, the AML program must be flexible enough to upgrade. If there is the regulation, again, the AML program must be in a way that will enable the business act in a fast way.
How does poor transaction monitoring look like in real business operation? What have you seen so far when companies thought that they are doing the right thing, but actually they did more damage than benefit? And how do you see that transaction monitoring needs to look like as a bare minimum?
Well, transaction monitoring is of course different in different types of entities. And what the goal of transaction monitoring is to ensure that you can spot, you can identify potential suspicious activity. Now, a poor transaction monitoring system is when the organization is doing a lot of work, but not necessarily detecting risks that matter the most. For example, transaction monitoring scenarios that the system is built or the thresholds is a separate, standalone process and is not informed by the changes in the risk rating of the customer or customer review information or adverse media information. These are some examples. And of course, poor governance may result to poor transaction monitoring. Managing when the management doesn't have sufficient information about alerts, about whether the program is indeed effective, about the number of suspicious activity that were reported to the financial intelligence unit. So all these things may result to poor transaction monitoring. Again, I've seen financial institutions that are using only rule-based systems, which I have explained before, they are able to detect typologies, patterns, these type of things. The ideal today for any financial institution is to integrate AI and ensure that the vendor they are using is not using AI as a marketing tool, but they can really explain how AI can help the business manage its risks, right?
Right. I think we didn't talk about one thing, and it's really the responsibility of management to put motivation in the compliance processes. Because if people are motivated to spot the problem, report the problem, think in the long term, that can eliminate a lot of problems. I'll just give you an example. You mentioned that training salespeople on compliance is hard because their motivation is to get as much money as they can today, because that's where their KPIs are, right? Their motivation is to bring as much business, good or bad, doesn't matter, because I'm evaluated on the number, not the quality of those leads. In your opinion, how good governance look like and how a business can actually implement motivating people to do the right thing, not just because it's the law, it's just because it shows to the employees that we are running this business in the right way in the long term and we are protecting the business.
Yes. Well, again, it starts governance. When we are talking about governance, we are talking about the board of directors, and it all starts from there. They need to understand what we are doing and why we are doing it, and have the right attitude. Yes, we will try to prevent and detect money laundering as it is required by the law. Now, if they accept that and they are willing to do that and they understand that we will be losing some bad business. I mean, there's no company in the world that is not approached by someone who has illegal funds. So we will have to reject some business, and we are willing to do that. If they understand and they accept that as part of their business, then we move on to employee training. Help the employees understand, the salespeople to understand, yes, we want only to work with legitimate businesses. And now, if they can include something, their KPIs about bad businesses, it's even better. But overall, it all starts first, the board to understand what we are doing and why we are doing, and then the employees. From there on, if we have the commitment of the board of directors, it's much easier for the AML officer, the compliance officer, to do the job in an effective way. Sometimes they told me the management is not cooperating, is not giving us budget. Same we have seen with some banks recently. They were penalized because they grew too fast, but they refused to invest in their compliance in their AML systems. They left the same team. When it was small, it grew, but still had the same team. They got a penalty because of that. And of course they will, because as you grow, you need to invest more. The risks are changing. And again, I see a governance problem here. Whereas they blocked in that case, they said we don't have any budget for AML, but we still want to grow. You understand that this is a governance problem. If you have, and sometimes when people tell me I don't have the commitment of the board, I say, focus on that. Stop everything else. Focus on that. Focus on getting their commitment, because if you don't have their commitment, you're trying to go through a dead end.
That's so true. If you don't have the budget for the compliance, you're going to have a budget for the penalty, right?
And the boards, the members of the board of directors are not bad people. In most of the cases, they simply don't understand why we are doing what they're doing. It's not that they don't want to, they don't understand why it's important and what are the risks.
That's true. And I think we arrived to the most important part, which is the education. We need to talk about these things, educate the board, educate the individual, educate businesses, and educate the whole market that how important is for everyone to do the right thing and avoid any kind of financial crime, because it doesn't just hurt you and create penalty for you, but it can affect the larger society very badly as well if everybody can do just whatever they want to do, right? So education should be the key.
Yes, I don't personally believe that I can change anyone. I post daily content on AML and compliance for those who want to understand. But, I believe that corruption is so big that, and a person, a politician or anyone else, if they are corrupted, I cannot change them with a post, right? I don't believe.
We don't know.
We don't know. Even if one person changes, 2 people change, 3 people change, not all 10 people will change. But I don't believe that everyone will change. That would be great, of course. But what I believe and what I tell people, focus on your business. Don't try to change others. It's exhausting and a mission impossible.
That's true. But even if you change one person or one business, then you already did a lot of good for the larger picture. So that's why it's good that you're posting content of this very important subject.
We contribute to the fight globally, but my individual efforts to change all this globally, only for those who want to change. So yes, we do hope. Yes, we contribute. We protect our business. But you see every year the money laundering, the amounts laundered every year is more and more and more. So.
One step at a time, right?
Yeah. Increasing awareness is important. My goal was to, when I started posting a few years ago, I realized that people were understanding, they were, ticking the boxes and not understand the principles. And the trainings that I do, I help people understand the principles behind the law. Overall, the most important thing is to understand the principles. And this is where I focus. And when I write, when I'm posting, why is my content applicable globally? In whatever country you are, it's applicable because I focus on the principles, and this is what I do with my trainings, and I'm sure this is what you do with your trainings also.
And this is what we need more of. And thank you for all the work that you do, Anna, because I think you do change the world and I think you do make a difference. And I think that's the most important thing. Raising awareness, talking about the problem, demystifying the law, as you said. So people are like, okay, it's just a law, we need to keep it, but make them understand that how important is that. And I would encourage everyone to go and check out Anna's content because they are absolutely amazing. It's really easy explaining the very complicated topic. And yeah, I would also really encourage everyone to reach out to us with your comment, your question. I'm sure that Anna would say yes to that as well, what I'm saying. It's very easy to find us. Let's start the conversation. Share your concerns, your ideas, your case studies, because that's the only way that we can fight against money laundering, financial crime, and just create a much safer and better business for everyone. So thank you, Anna, for being here with us today. I really enjoyed the conversation. I hope that there's going to be a lot of questions and comments that we have so we can continue this topic because I can just talk about it forever. And thank you for all the work that you do because it is important.
I'm waiting for the questions and comments. It will be a pleasure to answer the questions either in the form of a post or a YouTube video, something that I started recently, so why not?
Perfect. And we're going to include your link under this webinar so everybody can go and check it out, how amazing content you post. So thank you, Anna, and thank you very much for everyone who was here with us.
Thanks for the invitation.
Thank you.
Hey, welcome everybody. I'm 𝒂𝒂𝒏𝒅𝒆𝒅. Instant payments is transforming the way money moves all across the globe, across all the different industries. A recent study showed that 42% of instant payment transactions actually happen on the evenings and weekends. About $200 billion is currently locked up in the European financial system today. And instant payments really can help unlock this liquidity. The future of finance is instant, and those who adapt will thrive.